On March 9th, while the Nikkei was down 6%, the Korean KOSPI triggered a circuit breaker, and global markets were selling off across the board. China's OpenClaw linked stocks were going the opposite direction. uCloud Technology hit its 20% daily limit up. Qingcloud Technologies locked limit up. Hangzhou Shenwang jumped double digits. Bloomberg covered it. Sina Finance covered it. And the reason behind the divergence is a government policy document that almost nobody outside of China has read yet, but everyone in the AI space should. On March 7th, the Longgang district of Shenzhen released a draft policy titled Several Measures of Longgang District, Shenzhen to support the development of OpenClaw and OPC, making it the first government body in the world to explicitly commit fiscal funds to building an OpenClaw ecosystem. The policy is designed to make Longgang the global hub for AI agent startups. It went into effect in 2026 and runs for 3 years. And when Bloomberg reported it on March 9th, against the backdrop of a global market sell-off, Chinese OpenClaw stocks responded with some of the most aggressive single-day moves in the entire market. This video breaks down exactly what the policy says, why China moved when it did, and what the geopolitical implications are for the global AI agent race. The Longgang district policy has 3 core pillars, and each one is more aggressive than it sounds on the surface. The first pillar is free deployment infrastructure. The policy directs platform operators to establish what it calls Lobster Service Zones, dedicated infrastructure environments providing free OpenClaw deployment services to developers and startups. That naming is not accidental. Lobster, OpenClaw's deterministic pipeline engine, is specifically called out in the policy document by name, which means Chinese government planners are reading the technical documentation closely enough to identify the specific subsystem that makes OpenClaw enterprise viable. Enterprises that contribute code to the OpenClaw ecosystem or develop skill packages for ClawHub are eligible for subsidies of up to 2 million yuan, approximately $275,000 USD. The second pillar is compute and data subsidies. The policy opens access to high-quality public datasets for OpenClaw developers and provides 30 to 50% subsidies on data services, AI NAS hardware, and large model API usage costs. For a startup whose primary operating cost is inference compute, a 50% subsidy on API usage is not a marginal benefit. It is a fundamental change in unit economics that makes businesses viable that would otherwise be unprofitable. Enterprises newly settled in OPC communities receive 3 months of free compute resources on arrival. The third pillar is equity investment. Seed stage OPC projects. OPC standing for one-person company, the model of a single developer running an AI agent-powered business, are eligible for up to 1 million yuan in direct equity investment from the Longgang district government. This is not a grant, it is not a subsidy. It is the government taking an equity stake in individual developer businesses built on OpenClaw. The Longgang District Artificial Intelligence and Robotics Bureau is effectively becoming a venture capital fund specifically for OpenClaw startups. What makes this policy extraordinary is not just what it contains, it is the timing and the context. 3 weeks ago, China's Ministry of Industry and Information Technology issued a formal security warning about OpenClaw, citing autonomous decision-making risks, potential information leakage, and system control loss. The Chinese government was warning enterprises not to deploy OpenClaw carelessly. Now, 2 weeks later, a Shenzhen district government is offering subsidized hardware, free housing, 3 months of free compute, and equity investment to anyone building with it. That is not a contradiction. It is a sophisticated 2-track strategy that China has used before with other transformative technologies. Track 1. Enforce security discipline at the operational level. Regulate how enterprises deploy OpenClaw, mandate security standards, prevent careless mass adoption that creates systemic vulnerability. Track 2. Invest aggressively at the entrepreneurial level. Subsidize the developers who are building the next generation of OpenClaw native businesses. Ensure China has a dominant position in the AI agent ecosystem before the technology matures and market positions become entrenched. The strategic logic is clear once you see both tracks together. China is not trying to slow down OpenClaw adoption. It is trying to control the shape of that adoption, keeping the risk contained while ensuring that Chinese companies and developers end up owning the most valuable positions in the ecosystem. The market response on March 9th needs to be understood in context. Asia-Pacific markets were broadly collapsing that morning. The Nikkei 225 was down more than 6%, falling over 3,800 points below 52,000. SoftBank was down more than 10%. Sony and Toyota were each down more than 4%. The Korean KOSPI triggered a circuit breaker, halting trading mid-session. This was a risk-off, sell-everything environment, driven by geopolitical uncertainty and inflation concerns. Against that backdrop, China's OpenClaw concept stocks were moving in the opposite direction. uCloud Technology, China's largest independent cloud provider and a direct beneficiary of the compute subsidy pillar, hit its 20% daily limit up, the maximum single-day gain permitted under Chinese market rules. Cloud Technologies, another cloud infrastructure company, also locked limit up at 20%. Longgang Technology, Lakapay, and Hangzhou Shunwang all surged into double-digit gains. The Sina Finance afternoon session report described the OpenClaw concept sector as continuing to rally even as broader indices recovered only partially from their morning lows. The signal in that divergence is important. In a global sell-off, when investors are rotating out of risk assets, a sector that moves strongly against the market direction is telling you something about the conviction of the investors holding those positions. The people buying Chinese OpenClaw stocks on March 9th were not chasing momentum. They were responding to a specific policy catalyst that they believed fundamentally changes the revenue trajectory of those companies. The Longgang policy is the catalyst. The Bloomberg coverage is what brought it to international attention. Step back from the individual policy details and the stock moves and look at what is happening at the macro level, because this is the story that the financial press is underreporting. OpenClaw is an open-source project. The code is freely available to anyone. The question of who wins in the AI agent economy is not a question of who controls the source code. It is a question of who builds the best skills, the best pipelines, the best enterprise integrations, the best developer tooling, and the largest installed base of production deployments. The Longgang policy is China's answer to that question. By subsidizing skill development, compute costs, and startup formation around OpenClaw, China is not trying to own OpenClaw. It is trying to ensure that Chinese developers build the dominant layer of the ecosystem that sits above OpenClaw. That strategy is directly analogous to what China did with Android. China did not win the smartphone OS war. Google's Android won that. But Chinese manufacturers, Huawei, Xiaomi, Oppo, Vivo, built dominant positions on top of Android and ended up controlling massive portions of the global smartphone market. The Longgang policy is a bet that the same pattern will play out in AI agents. The base layer protocol goes to a global open source project, and the economic value accumulates in the application and services layer built on top of it. The MIIT's security warning and the Longgang investment policy are two instruments of the same strategy. The security warning ensures that Chinese enterprise deployments are hardened and controlled. The investment policy ensures that Chinese developers are building the application layer. One protects the infrastructure, the other builds the business. The Yonhap news agency reported on March 9th that the OpenClaw craze in China has become significant enough to be mentioned in the National People's Congress, China's equivalent of a joint session of Congress, under the framing of raising a lobster. That phrase is a direct reference to OpenClaw's lobster pipeline engine, and its appearance in a national legislative body signals that OpenClaw has crossed from the developer community into mainstream Chinese economic policy discourse. The South China Morning Post has been tracking the grassroots OpenClaw adoption in China separately from the policy layer. The Instagram post from an SCMP correspondent describes scenes of more than 20 Tencent employees showing up to help strangers install OpenClaw in public spaces. Students, teachers, non-developers, entirely voluntarily. The technology has achieved the kind of organic mass adoption that governments respond to, which is precisely why the Longgang policy is arriving when it is. On a day when global markets were selling off and circuit breakers were triggering across Asia, Chinese OpenClaw stocks hit their daily limit up, Behind that move is a government document that commits state capital to building a Lobster Service Zone, subsidizes compute costs by up to 50%, and takes equity stakes in individual developer businesses built on OpenClaw. China is not reacting to OpenClaw. It is positioning around it, with the same two-track strategy it has used to build dominant positions in every previous technology wave. Subscribe for ongoing coverage as this plays out. Hit like if this gave you a clearer picture of why the China OpenClaw story is bigger than a single stock move. And drop a comment. Do you think China's government investment strategy will work the same way it did with Android?